Crypto has spent years proving that it can create markets for digital assets. But RWAs ask a bigger and more practical question. Can blockchain rails also handle the assets that people invest in outside crypto? Stocks, treasuries, credit, commodities, real estate. These are the markets where the real money economy stores capital, borrows money, lends money, hedges risk, and invests in long term. So, when you look at RWAs, do not see it as putting stocks on chain. See it as crypto trying to make traditional finance assets more easier to access, easier to move, easier to verify, and more useful inside on-chain applications. That is exactly why studying the state of real-world assets on Solana makes the absolute sense right now. Let's start from the basics. For a real-world asset to work on-chain, it needs issuance, compliance, custody, liquidity, audits, legal rights, and a redemption path that people can actually trust. And this is also where Solana gets interesting. Solana already has high throughput and low cost path, which matters because these assets need to trade, distribute yield, settle, and move through DeFi without every small action becoming expensive. But the most important part is that what happens at the token level. With token extensions, Solana gives issuers tools like transfer hooks, interest-bearing tokens, and confidential transfers where amounts can stay private while auditability remains possible. Now let's talk about the recent data. In June 2026, Solana's RWA value crossed $3 billion for the first time. Cumulative tokenized stock value crossed $10 billion. Daily tokenized stock volume reached all-time high of $683 million. And SPCX became one of the biggest signals of this shift. Securities listed tokenized SPCX shares on Solana through Sunrise, and SPCX reached $108 million in 24-hour on-chain volume. From where I see it, this is a bridge between traditional finance and on-chain markets. The opportunity is big, but it also means that market needs more careful thinking. Every RWA token should be judged by the structure behind it, such as who owns the token, what legal claim does the token represent, are reserves audited, is there real liquidity? Now these questions matter because serious tokenization and weak synthetic exposure can look similar on the surface, but they are very different underneath. This is also a point where builders become extremely important because next phase of RWAs on Solana will not be won by issuing more assets. It will be won by infrastructure around those assets. From an engineering POV, we need RWA data indexers, risk-gated engines, liquidity routing, compliance APIs, and lending markets where RWAs can become collateral without creating hidden risk. Real-world assets matter more than ever on Solana right now because they are Solana's real market test. Can stocks, treasuries, credit, commodities, and real estate move with internet speed while carrying the real-world trust? Now, if that works, then internet capital markets will stop being a slogan and they'll become the product surface being built on Solana.